Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. All eyes really on the G20 this weekend and the proposed meeting between President Trump and President Xi. That's obviously sort of gained further sort of importance now, obviously with the ongoing trade spat between China and the US. The latest sort of round of tariffs, Trump has sort of put on hold a little bit until they sort of get this meeting out of the way. But obviously that news of that meeting sparked a really pretty major rally in global equity starting in the US. And that's sort of been further buoyed this morning by Stephen Mnuchin coming out and saying that they're about 90% there on a deal, and he sees a pathway for getting a trade deal done as well. Now, obviously, that's a pretty big statement. Potentially it might just be a little bit too much, too much of a stretch to get that done at the G20. But if they really are that close, then potentially I think both sides really do need a deal. Certainly the US does, and also China as well. And so potentially in the next sort of 3 to 4 weeks, that deal should be done. Now, obviously, it has been a pretty major turnaround in the global equity markets, and the US is potentially way overbought at present. It's in a really sort of sharp spike back, and really as you head in now to sort of the first week of July, and obviously the big holiday July the 4th, maybe it's time just to take a little bit of a breather. It'll be interesting to see what happens though if there is a trade deal done, and the US market does sort of push on. The economy then does start to recover a little bit of sort of confidence, and it's still pushing on at a pretty good rate. What does that do to the Fed? The Fed have come out and said they are on hold, and potentially now they're looking at maybe sort of 2 cuts before year end. And certainly if you look at it, US 10-year interest rates, really fallen dramatically from sort of over 3% now to around sort of 2% at current levels. Quite interesting as well, obviously President Trump didn't want to be outdone by President Xi, and he sent a letter to Kim Jong-un. No one quite knows what was in the letter, but obviously both sides said, it was a nice letter, it was very meaningful, etc., etc. But again, just sort of keeps the pot sort of boiling there. Oil on the back of the sort of sharp turnaround in equities, potentially global growth now starting to sort of pick up if you do get a deal between China and the US. That's come back pretty dramatically as well. WTI now sort of 59 and change. Sort of 10 odd days ago that was trading around sort of 52, 53 bucks. Interesting in the UK, Boris Johnson, the front runner to become the new leader of the Conservative Party, and obviously the new PM, facing a little bit of a sort of press debacle with a potential domestic incident at his residence with his partner, and now refusing to sort of take any questions on it, etc. And it really just puts a little bit of a sort of cloak of sort of uncertainty and lack of transparency. And obviously, that's not really an endearing quality for a leader or a prime minister. But as discussed here, you still got the same issues. The Brexit issues haven't gone away just because you've got a new leader. It's going to be hard to see how that's all going to come up rosy. Here in New Zealand, a little bit of a sort of political shake-up, sort of a minor cabinet reshuffle. Potentially the sort of major casualty could be the Housing and Transport Minister, Phil Twyford. Last few days as well for KiwiSaver to get those contributions in, obviously to get that maximum tax credit. Now, the Reserve Bank left interest rates unchanged yesterday, but again sort of hinted that if there was a sort of a slowdown in growth and global growth as well, interest rates could well go lower. Now, if you look at them, they're on record lows now of 1.5. Where they go to 1.25 or 1%. That's very low, very low. And what it does do, obviously, it underpins the housing market because mortgage rates are cheap and likely to get cheaper. But then the flip side is obviously savers suffer because interest rates are coming down. Indeed, Auckland Council have a potential bond in the marketplace, 6 years. That may be lucky to have a 2 handle on the interest rate. Rate hasn't been set yet, but you may just get a 2 handle. If not, it'll be a 1 point something. That's very low for 6 years. Now, if you are looking for income, I said there's plenty of alternatives out there in terms of dividend shares. Give us a call on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.